we were able to get out of the way entirely in one fund about 42 days ago and have now prepared everything to grab the turn.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. In today's video, we're going to be going over some XRP technical analysis updates, giving you guys accurate updates in a timely manner, going over some price levels to be paying attention to as the ones that we've most recently given have materialized and come into fruition. We'll touch on that briefly. We'll also discuss and talk about the new launch of the Franklin Templeton XRP ETF, just launching today. We'll take a look into that fundamental piece, but then I also want to take a look deeper under the hood and talk to you guys about why we saw a rally in risk assets today and over the weekend, and prepare you guys for the week ahead before we head into the holiday stretch. So if you guys enjoy these accurate updates, no hopium, no hype here, real institutional insights in the CYPRX space, then do me a favor, smash that thumbs up button and subscribe. So taking a look back at what we previously had touched on, in case anybody is new here, in a previous video breakdown, I touched on how we talked about possibly looking at some dollar cost average opportunities at about $1.90 to $1.56. Those levels have now been met to the absolute T of a degree. So hopefully you guys are paying attention. Now, those are our institutional dark pools. But what I want you guys to really pay very close attention to is the institutional deltas that we also give to our private community members in advance. You can see that XRP tapped into about $1.84 to the freaking pip. And so if we come back over here to Twitter, just to show you guys the level of accuracy here at CYPRX that we operate with, you guys can see over on Twitter, I mentioned to you guys on November 21st that these were our updated levels. You can see the green horizontal lines and the green horizontal boxes. Now, the green horizontal lines are our institutional dark pools. The ones underneath of that, the green horizontal boxes, are our institutional deltas. Now, if we take a look back just to show you guys that we give access to these levels to our private community members well in advance, here is from our institutional scalper, that update on Sunday, November 16th. Timestamps matter to us here in this community because you'll see a lot of retail influencers out there that'll be like, oh, dark pools don't exist, or your institutional software can't gather that information in advance. And we prove time and time again that it can, and it can do so very, very accurately. So Sunday, November 16th, 2025, you can see here, this is when our scalp deltas were updated in the private community. And if we zoom in right here, again, taking a look at where price action was trading at $2.21, our software had highlighted possible buying opportunities in deltas at around $1.84 to $1.90, and the dark pools in the $1.84 range for the deltas. So now taking a look at price action, you can see that price came straight down into about $1.84, respected the $1.90 range, held that as support, and has now rekindled some of the losses from last week's sell-off, coming up into the $2.28 range, which I also mentioned to you guys just to, again, take a look back at historical context of what we were previously talking about. This 45-minute updated video breakdown I went over for you guys, and you can see here we have a sell dark pool in this particular video breakdown that is from November 23rd. So again, all this information given to you guys in advance. The sell dark pool popped up on our software at $2.28. Ladies and gentlemen, you cannot make this up. Look at where XRP's price came and tapped straight into today, going from delta to dark pool at $2.28 before stalling out as we roll over into Asia session. So again, hopefully you guys have enjoyed these accurate insights. No hopium, no hype. What you'll notice is that there's no retail-based indicators on my charts. It is all institutional insights, both fundamentally driven and technical analysis. Again, if you guys want accurate updates, you want to actually attend a community where you can directly speak to our institutional scalper and gather these insights when they matter most, head over to CYPRXtrading.com. We'd love to have you on the team. Before we talk about why the total cryptocurrency market cap had an over $90 billion bounce on the day, we can come over here. We can take a look. Right now, hovering at about $87 billion up on the day, or about 2.98%. When I wrote the fundamental piece for the private CYPRX community, the total cryptocurrency market cap was up about $90 billion. So I want to thoroughly cover for you guys why that was. We'll go over that fundamental backdrop in detail, and that'll leave you guys all for the remainder of the week with a clear mindset as to what to expect moving forward and what we would ideally like to see a continued risk on rally. Before we get into that, a lot of people on the internet will say that the rally today was because of the release of the Franklin Templeton launching XRP ETF, XRPZ today. Now, I'm not going to say that had nothing to do with price appreciation today, but today's fundamentals are definitely a lot deeper than what the headlines may seem or make it out to be. And we'll cover that here in just a second. Because nonetheless, this is still exciting and still shows increased adoption amongst financial institutions. Reading thoroughly through this, it says Franklin Templeton's new XRP exchange traded fund officially goes live today under the ticker XRPZ on the New York Stock Exchange ARCA. The launch comes after the exchange received regulatory clearance, allowing the asset manager to offer U.S. investors direct exposure to XRP through traditional brokerage vehicles. I want to come down here because this is where it gets interesting. The launch follows the SEC's review of 6 XRP ETF applications, a key step in testing whether altcoins can follow the approval path set by Bitcoin and Ethereum ETFs. Several applications, including 21 shares, CoinShares, and WisdomTree, are still being reviewed. Rulings are expected to influence the future of altcoin ETFs in the United States. I'm going to go outright and say that over time, all of these ETFs are going to get approved, and we're going to see many more ETFs for many other altcoins spread out across the board coming to fruition in 2026. Recently, XRP has gained some momentum, breaking above the $2 threshold and increasing nearly 3% in the last 24 hours. Many analysts are hopeful. We don't hope here at CYPRX. We utilize accurate data to gather our insights, but many other analysts are hopeful about the token's future growth. Meanwhile, new developments such as potential staking on the XRP ledger, which you know we are very big advocates about here in this community, show that the ecosystem is still evolving and innovating. The launch of Franklin Templeton's ETF is the latest sign that investors from more traditional markets are slowly becoming more interested in crypto. This provides wider access to XRP as the market gradually recovers. So very interesting mainstream headlines here that definitely drive more attention to this space, not only for retail investors, but also for institutional participants. And that is something that we definitely need to see more momentum in the digital asset ecosystem. But let's actually take a look under the hood today, and let's go over the fundamental backdrop as to why we saw a relief rally in the total cryptocurrency market cap and XRP's price pop back above $2 and tap into our institutional dark pool at about $2.28 before we take a look at the technical analysis levels that we are paying very close attention to. So reading through this for you guys. Fundamental market update, November 24th. The crypto market finally caught a breath today after a brutal stretch of risk-off pressure last week. The total cryptocurrency market cap bounced back about $90 billion, recovering a portion of the losses that were washed through the space in mid-November. This wasn't just a technical relief rally, it was a shift in the macro tone driven by multiple genuinely supportive catalysts hitting the tape at the same time. Number one, we had the dollar soften and rate cut odds rise. One of the biggest tailwinds for today's move came from a weaker US dollar. Dovish-leaning comments from Fed Governor Christopher Waller, one of the Fed's more influential voices, gave markets the green light to price in a higher probability of a December rate cut. Waller pointed directly at the softening labor market, acknowledging hiring concentration is not a good sign. He thinks September employment figures will likely be revised lower. And he mentioned inflation is not a big problem in the face of weaker employment data. This was quickly echoed by New York Fed President John Williams, who described Fed policy as modestly restrictive and noted the labor market has gradually cooled with rising downside risks. That was enough for the market to react fast. The CME Fed Watch rate cut odds jumped back above 70%, the highest in over a week. Investors are now openly discussing the possibility that the Fed is in line for its third final rate cut of 2025. And as always, when the dollar loses steam and rate cut bets rise, historically, crypto breathes. Number two, we had labor market data continue to roll over. The latest round of data delayed due to the 6-week government shutdown painted a clear picture. The job market is still losing momentum for now. Unemployment rates last week tipped up to 4.4%, the highest level in nearly 4 years. Economists quoted today made the case bluntly. These are the types of economists that we pay attention to. We read bank reports. An economist from Wells Fargo said, the deterioration in the labor market is enough justification for a December rate cut. An economist from Deutsche Bank said the jobs market sits in a precarious spot. This is exactly the kind of data that the Fed has been waiting on signs of cooling, not a collapse. For markets, we know that cooling equals easing, which tends to equal risk on sentiment. Number three, we had the geopolitical sentiment improved. A revised peace framework emerged. A major portion of today's optimism came from something markets haven't had in months: credible progress in the Russia Ukraine front. US and Ukrainian officials met again in Geneva and began narrowing differences on the newly drafted 28-point peace framework. While still early, this version is notably more balanced than the earlier US proposal that was criticized for favoring Russia. Key headlines included that Ukraine and the US were working towards an agreement by Thursday this week. Interestingly enough, that is before the holiday. European allies proposing a counter framework with security guarantees. Broad sentiment towards the diplomatic push improved. Even though nothing yet is set in stone, markets price momentum, not certainty, and today, geopolitical momentum leaned positive. Risk assets responded accordingly. And number four, Secretary Scott Bessent added fuel to the fire. Treasury Secretary Scott Bessent added another tailwind with upbeat remarks this morning, reinforcing the view that consumers remain resilient. Inflation is easing progressively, and policy adjustments are still on the table if labor data continues to soften. His comments align perfectly with Waller and Williams, a rare moment of coordinated soft tone messaging. When policymakers talk in the same direction, markets listen. What is still ahead this week, and what do we need to watch? So make sure that you guys are paying attention. Despite today's relief rally, this week is packed with catalysts that can either extend this move or unwind it entirely. Here's what matters most. Number one, we have more labor data. Initial claims, ADP weekly claims, continuing claims, job openings. Pretty much any continuing softening reinforces rate cut odds and will likely support risk on flows. Any stronger labor data will likely weigh on rate cut bets and strengthen the dollar, which could have an inverse effect on the current optimism. Number two, we have the PCE inflation, which is the Fed's preferred metric. If PCE cools or even stays flat, markets will likely double down on December rate cut expectations. Inversely, if the PCE comes out hotter than expected, markets will likely push back on the current rate cut odds. We need to be very mindful that some Fed officials are still pushing back on a December rate cut. If any of them in the coming days lean hawkish, expect short-term volatility to pressure risk sentiment. Number four, geopolitics. The peace framework talks continue all week. Any headlines showing disagreement or a breakdown between Russia and Ukraine could reverse the current sentiment very quickly. Today's bounce was not random. It was the first day in weeks where multiple macro forces align in crypto's favor. Dovish Fed tones, softer dollar, weakening labor market, rising rate cut odds, geopolitical progress, and upbeat remarks from top US officials. If incoming data this week supports this narrative, especially PCE and job numbers, the market could carry this momentum into the month's end. But if labor data comes out upbeat, inflation surprises to the upside, rate cut odds dwindle or peace talks stall, any demand for the dollar stems overnight, the tone can flip fast. For now, crypto is finally breathing again, but this is still a headline-driven market. Stay alert, stay adaptable, and stay ahead of the narrative. Remember, we also have a jam-packed week ahead for Japanese data. I am paying very close attention to any aggressive yen strength that leads to any unwinding of yen carry trades, which we covered thoroughly in yesterday's video upload. So, now that you guys understand the fundamental backdrop, what supported risk sentiment this week, again, make sure that you guys thoroughly understand these things. And if you all want access to these timely types of updates, inside the private CYPRX Discord, I hand type out these reports every single day. I update the community every single morning and every single evening on any changes or shifts in the fundamental backdrop that is either weighing or supporting on risk sentiment. Heading over to the updated technical analysis, considering that now we have bounced from our dollar cost average range at about $1.90. So if anybody was paying very close attention to the technical analysis updates that we were given and you were able to catch a bid at $1.90, pat yourself on the back. Well done. Our positions are currently sitting slightly in profit. It is nothing to celebrate yet. We are not out of the wits. Now that we have come up into about $1.28, let's talk about what we would ideally like to see in terms of price action at these levels in order to see a sustainable rally into higher price levels. The next institutional dark pools for the sell side sit at about $2.61 to $2.83. So under continued risk on sentiment, and if we continue to hold above the $2.20 range, see buyers break back above this, overpower sellers that existed here previously, and turn this into support, then we can start to consider higher prices on XRP coming in at the next sell deltas at about $2.61 to possibly $2.83. So what we would ideally like to see in terms of technical analysis is three different scenarios. Number one, worst case scenario for a bullish continuation is buyers defend at these current higher prices, push price back down into the institutional dark pool for buyers to reaccumulate orders, defend at their previous buy positions, hold $1.90 as support, and rekindle losses, pushing price back above the $2.28 range. A medium retracement scenario would be sellers defending at $2.28, pushing price back down into about $2.06, buyers finding support, becoming aggressive, and pushing price back above the $2.28 range. And the third and final scenario that we would ideally like to see is if neither of these happen, we do not get any retracement, buyers continue to gain the upper hand, they continue to break aggressively above previous areas where sellers trapped buyers at highs and turn this level into resistance. We'd ideally like to see $2.28 turn into support. And then that will open the door for a possible revisitation of $2.61 as our next institutional target, rekindling more of the November losses. If at any moment in time we can see an aggressive bullish recovery on risk assets and the total cryptocurrency market cap in general, keep in mind the highest institutional deltas that have popped up on our radar as of recent over the past consecutive couple of months have been $4.44 and $5.17, where I will aggressively start to consider taking profit if sellers do show their hand at these levels intraday. Keeping those levels on my radar, no hopium, no hype. We'd like to see buyers hold above $1.90, break above $2.28, turn it into support, and then we can start to revisit higher price levels at $2.61 and beyond. We'll likely give you guys another update up into those levels. If we break higher, if we come up into $2.61, heading into possibly $2.83, I will make sure to give you guys a video update in the coming days ahead. Inversely, if we fail to see a sustainable break and hold above $2.28, the inverse scenario to the bullish scenario that I just gave you would be sellers trapping buyers at highs, failing to rekindle the November losses, risk sentiment souring due to some type of fundamentally driven event, sellers becoming aggressive back beneath $2.28, and pushing XRP price back down into the intermediary lows at about $2.06 as our first bearish target. Underneath of $2.06, a revisitation of $1.90 is still on the cards if sellers gain the upper hand and buyers cannot break bullish above $2.28. If at any point in time sentiment deteriorates further from where we're currently at now, we see a pushback on rate cut odds, we see aggressive yen strength leading to massive liquidations across global risk assets due to unwinding carry trades, anything that creates massive demand for safe haven assets in the coming days ahead, then a break below $1.90 would reopen the door for about $1.56. And another area of interest that has now popped up on our radar if sentiment does deteriorate further is the institutional dark pool resting at about $1.20. For now, $1.90 is on my radar as our most immediate bearish target if sentiment deteriorates or worsens any further. Just like the $2.61 range to the upside, I will most likely be giving you guys an update between now and the coming days ahead. With that being said, hopefully you guys have enjoyed our accurate and timely updates. Hopefully you guys are paying attention as we make some of these updates and announcements public on our X profile and on YouTube. If you guys have enjoyed, do me a favor, smash that thumbs up button and subscribe, as there's a lot of hopium and hype and fluff that exists out there in the internet. If you guys want to push past all that, you want direct access to these institutional insights, these fundamentals, these institutional deltas, they all exist updated in our private CYPRX Discord every single day. We'd love to see you on the inside. With that being said, many blessings, be cognizant, be aware out there, and I'll see you guys in the next video breakdown.